Hello friends, from the fundamental research desk today we have another stock idea coming, that's Relaxo Footwear. Now this company is a mid-cap company with a market capitalization of around 800 crores and a turnover of around 860 crores which it gave in FY12. Basically we like this company and that's the reason we are initiating coverage on this particular stock with a buy rating and a target price of 885 rupees. Our liking for this company stems from three basic reasoning. First is it's a very good play and has a very good leadership positioning in the organized footwear segment, which itself is growing at a good pace of around 15 to 18% over the last 5 years if you look at the record from FY8 to FY12. And going forward also various industry estimates show that the industry is likely to grow at the similar range. Now when you look at this company's performance, that is Relaxo's performance in this particular time frame, it has outgrown the industry. Its growth has been around 29.5% on the revenue front and around 40% on the earnings front. Apart from this, the company has, this has been possible because of 4 very good brands which the company has. The flagship brand is Hawaii, wherein which enjoys around leadership position, a market leader kind of a position in the northern India. It is synonymous to rubber slippers. Apart from Hawaii, it also has 3 other value-added brands in its portfolio, that is Flight, Sparks and Schoolmate. Each of which is growing at a very healthy pace if you look at the last 4 to 5 years performance. So this is one basic reason why we like, because the brands are really well recognized. They have engraved a top of mind recall in the minds of the customers, consumers. That's one thing. The second thing is when I look at the distribution bandwidth of this particular company, I really like the distribution. We really like the distribution bandwidth. Now the products the company sells is through distributors, which it sells to the distributors, and the distributors in turn sell the product, the final product, to the retailers. It has an array of around 700 distributors through which the product is sold, which gets which gets it reached to the retail points, and the retail points are more than 50,000 across India on a pan-India basis. Now despite having this 700 distributors, when we look at the working capital cycle for this company, that's very beautifully managed with a working capital cycle of around 30 to 35 days and an inventory of around 10 to 12 days. That means it sells its products to the distributors on an outright sales basis. There is no consignment, no return back policy, nothing like that. So which is like very good from a balance sheet perspective. That's the other thing which we like. Now despite having such good distribution led model, the company has entered into direct retail model. That means it is selling directly its goods to the consumer through a retail shopping center, retail shops called Relaxo Retail Shopping, wherein there are no distributors, no middlemen. You have a company owned, company operated distribution setup. That means a store where entire goods are displayed, brands are displayed, and the consumer buys. So this is another leg of distribution mode which the company is adding, and here also we believe that the margins and everything in this particular mode would be much higher. So this is another point which we like about the company, that already a good distribution setup, adding a new leg of growth to the distribution setup plus strengthening the existing bandwidth will give ramp up to the earnings. Now in the last 2 to 3 years, it has been very aggressive on the brand building initiative, the company. And recently it has, if you look at the recent portfolio of the company, as far as the brand building and the brand aggression is concerned, it has signed all leading Bollywood actors to promote its brand. Hawaii is being promoted by Salman Khan. Then you have Flight, which is promoted by Katrina Kaif, and Sparks, where the brand ambassador is Akshay Kumar. So aggression on the brand building front is also coming into play. We believe all these things will drive volume and it will further create brand recall in the minds of the consumer. So that's another, this is the second point which we like. The third is, despite being all positives on this particular front, on the strategy front, on the company's positioning front, there is another element, external element, which is adding to the advantage of the company, that is the raw material price. Raw material, three basic raw materials are there as far as this company is concerned: raw rubber, EVA and synthetic rubber. These three raw material together constitutes around 55 to 60% of the total raw material cost for the company. There are other raw materials as well. Now in last 2 years, if you look, the raw material pricing was on an upshoot, where the raw rubber prices shot up by around 150-160 percentage. So that had given certain contraction on the operating margin front, and despite this contraction, this 40% kind of an earnings growth the company recorded. Now if you look at the trend in the last 2 to 3 quarters, the raw material prices are on a downward trend, raw rubber as well as EVA. And going forward also, the outlook for this raw material is not very positive on the northern side. It is coming on the downward side itself. So we believe that would also act as a support for the company for higher earnings and expansion in the operating profit margin. In our estimates, we are expecting 120 basis point expansion in the operating profit margins over FY12 to FY14 for the company, because of this raw material thing, and secondly because of increase in the value added products in the total portfolio mix. So these 3 points primarily tells us that Relaxo is now transforming itself from a pure plain vanilla commodity play to a branded retail play, and a player in a branded retail play getting a valuation of around 11.5 times its 1 year forward doesn't look, doesn't capture the entire valuation game on a branded retail play, where other branded plays, they are trading at around 20x, 22x their 1 year forward. So we believe that this is a candidate for a re-rating, and hence we initiate our coverage with a buy rating, and we give a target price of 885 for Relaxo, which is 15 times its 1 year forward EPS, 1 year forward earnings. Thank you.